Does the Federal Reserve buy assets to control inflation? Have you ever wondered how the Federal Reserve influences the economy and manages inflation? One of the tools in its toolbox is asset purchasing. But what does that really mean for inflation control? Let's break it down. The Federal Reserve, often referred to as the Fed, uses asset purchases primarily to stimulate the economy during tough times. When the Fed buys assets like United States Treasury securities and mortgage-backed securities, it injects money into the banking system. This increase in money supply lowers longer-term interest rates. As a result, borrowing becomes cheaper, encouraging people and businesses to spend more. This is especially important during periods of slow growth or recession, when the economy needs a boost. However, when it comes to controlling inflation, the Fed usually takes a different approach. To combat rising prices, the Fed tightens monetary policy. This means raising interest rates and reducing its asset holdings. This process is known as quantitative tightening. By selling assets or allowing them to mature without reinvesting, the Fed pulls money out of the financial system. This action can help slow down economic activity and ease inflationary pressures. During significant economic crises, like the financial crisis of 2008 or the COVID-19 pandemic, the Fed's asset purchases were substantial. The goal was to support economic recovery by increasing liquidity in the market. But as inflation has surged in recent years, the Fed has shifted its strategy. It has begun to reduce its asset holdings and raise interest rates to bring inflation closer to its target of 2%. So, to answer the question directly, while the Federal Reserve does buy assets, it does so mainly to stimulate the economy when inflation is low. When inflation is high, the Fed typically reduces its asset holdings and raises interest rates to tighten financial conditions. This approach helps to slow inflation growth and stabilize the economy. Understanding this balance is key to grasping how the Federal Reserve operates in the complex world of monetary policy.